eventually China's going to have a bottom here. I mean, you want to talk about, people can't take it anymore. Alibaba, they can't take it anymore. I mean, Alibaba's down 25% in 3 days. And I'm not saying I'm coming in buying Chinese stocks, but this is what you need to see in the broad market to shake everyone out. I still get every single day, what are you buying? What are you buying? What are you buying? The FOMO's still there. So that's why I don't think we're at a bottom. But do we need to bounce? Yeah, like I want to bounce to sell. And you know what? On the next bounce in emerging markets, I'm going to be selling. So, I mean, I'm selling into bounces in the long term. I raised my cash from 35 to 47. So I did that on the last bounce. I'm going to probably do it again. I might go over 50. But the bounces, I'm not selling in the hole. I'm not, trying to trade from like, oh, I'm just going to short stocks when we're, Alibaba, let's short it now at 75. No, you're going to get your head ripped off. There's going to be a vicious bounce in there. You go up 15% one day and you'll be like, what happened? So, I mean, it's a trader's market right now. Buying dips, selling rips, playing the chop. That's it. It's going to be lots more rips to sell. It's going to rip on this PPI number because we were talking, we've been talking about inflation being a major concern here, and you get a little bit of a light number, just a smidgen light. But that's good enough to give people an excuse to come back in, and the FOMO still exists.
And you've been saying it, but I think it was Cameron that actually put a number on it last week, Dennis. She said that from 2000, the dot-com peak to the bottom in 02, I think there was a couple times there where the NASDAQ went ripped like 40% higher, like in within that longer term downtrend.
Oh, yeah.
Yeah.
There was 3 or 4. There's been some wicked bounces. There's wicked. The biggest rallies you will see are in bear markets.
Yep, that's
because
for sure.
you've always got shorts in there, and you've got people scrambling for cover.
Yep.
Always the biggest rallies you see, the little individual rallies, are wicked. So it's the same thing like when stocks are going straight up, it's wicked sell-offs. When stocks are going straight down, it's wicked rallies. It's just in reverse. So you're going to see these wicked rallies every once in a while too. But if you're trying to time the wicked rally, it's a tough game. So trend is still not your friend in anything right now. And I think, let's say, for instance, Apple, and I sold some of my Apple at 162 last week. It's 151. It's getting a little bouncier this morning. Still long Apple, just lightened up. But you get back to 160 in Apple, you don't think there's overhead supply? Lots of people saying, we're only 180 and going to lighten up here. So that's the problem, is there's so many people just looking to get their money back in everything now. It's a tough market to just call a bottom and say, is this the bottom? Is this the bottom? I don't think we've seen the bottom
This market's so schizophrenic,
headline driven.
Yeah, we're just not like COVID concerns yesterday, right? In China and other places. Well, no COVID concerns with the airlines today, right? Everyone's going to be flying. And frankly, I don't think that that's our big problem. That's not what I'm concerned about. And I don't see how this market can have a sustained rally with the geopolitical tensions. Not that we can't have intermediate moves, but I think,
Yeah.
we're on the precipice of something that, our country hasn't seen in 100 years, and it's not going to get resolved. Whatever headlines they want to put out there, oh, talks or this, talks or that. I mean, yeah, and I'd like to see the volatility come down, and you have the daily ranges are coming down a little bit, but I'd really like to see them, instead of having these rips, I'd like it to be more of a grind, more of a, like, okay, buyers in there, I missed the bottom. Now it just feels like these rallies, these two quick rallies, they're just, the sellers try and selling on strength. It doesn't happen. Then they start selling into weakness, and, you get these big declines. So, just feels like there's a supply up top. There's sellers, right?
Yeah.
But when you fall, that like the buy, it's just I don't think we've broken the buy the dip, mentality. But a lot of people have gotten their fingers chopped off doing
We
it a
haven't
little
broke it
bit
though.
more.
People,
Yeah,
who have
yeah.
started trading in the last 2 to 3 years, and there's a lot of people that just opened up accounts during the pandemic, haven't seen this before, and they still are believers that AMC is coming back to $70 a share, that GME is going to be $350 a share again, that your whatever stock you want, Fastly, which is unbelievable. It's $13 now, Fastly. I mean, we saw when Fastly went down for a day how messed up the internet was, Spencer. I mean, this is a company that actually does something very important, obviously, behind the scenes. The stock was an all-time high of $136. It's 13 bucks.
Yeah.
I mean, there is room for this thing to go to 15 or 16, and that would be a wicked little short squeeze. Is it going back to 130? Is it going up 1,000% from here? Tough. So I don't know where the bottom is. I'll say some of this stuff is way oversold, and there's going to be some people that make some money buying these stocks. I kind of wanted to buy Fastly at 19. I'm glad I didn't. It's 13. I kind of want to buy it at 13, but then you go and you look at the valuation, and you're like, well, it's still not cheap. People are saying, what the hell are you talking about? It's not cheap. What's a PE on Fastly? They don't think they make money, do they?
It's affordable, I can tell you that. $13.